Good evening, traders, and welcome to Prime FX lesson 4. This lesson is on support and resistance. So let's go to a clean pair, for example, Euro USD. Let's go to a higher time frame. This is called daily time frame. And the reason why we like to start on a daily time frame is because we want to see what price action is doing every single day. Okay, this will help you if you want to be an intraday trader, if you want to do a medium swing trading, or if you want to do long-term trading. Okay, having a high time analysis can give you a good direction in where the market wants to go next. Okay, so looking at the daily time frame, what you can spot is a trend. Okay, we can see on the market, if we look left, that the market is trending. Okay, and how do you know if the market is trending? The market creates something called, this is a high, this is called a low. So what the market creates is it creates a high point, then it creates a low point, then it creates a next lower point. Okay, so this is called a lower high. The reason why it's called a lower high is because it's lower than the significant high point where the market reversed from and started to trend. So this is your high, this is called your low, and this is your lower high, because the market's high is here, the significant high, the significant lower high is here. Okay, so this is how you know that the market's starting to trend. And then you see another low, this is called the lower low, because it's lower than this low. So you got your high, then you got your low, your lower high, your lower low, your lower high, your lower low. This is a higher high now, because it's higher than this. And then this is potentially a higher low, because look at the body closure, it's higher than this. But then we're back to the trending again. This is your lower high, your lower low, lower high, lower lows, low, and then equal lows. So this is now a double bottom, and the market started to trend upwards. Now we've got a higher high, higher low, a new high high, and the market came back down and created a new equal lows, lower high, lower low, and now we have a lower high occurring. So now with the market creating lower high, we know the market wants to go lower because it's trending downwards. We haven't broken any significant structures to change the trend. So this is our first high point. This is our second high point. Another significant high point. And this is it. So you can just draw these, kind of help you identify the trend and where the market is going and where it wants to go next. Okay, so if it breaks this, it wants to come here. If it breaks this, it wants to come here. If it breaks this, it wants to come here. Once it breaks this, you can see it's like a ladder. Okay, you're just creating yourself a little ladder. So all of these now become your resistance. Okay, these are all your ceilings, areas where price action can be rejected because previously it's been rejected. That's what resistance are. Okay, it's your ceiling, an area where price action can reverse from, an area where price action has been before, and an area where price action can turn from, basically. Okay, so that's your resistance points here, 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 here. Okay, so you go down to the 4 hour. When you go to the 4 hour, you want to look at the most recent price action, okay, in a 4 hour, because the 4 hour itself is a high time frame. Each candlestick represents 4 hour period. Okay, 4 hour, 4 hour, 4 hour, 4 hour, 4, 8, 12, 16, 24. Here, 1, 2, 3, 4, 5 candlesticks there represent your 24 hour period there. Okay, There you go. Sorry, six. 1, 2, 3, 4, 5, 6. Your six candlesticks there represent your 24-hour period there. And you want to look at your 24-hour period high point. You want to look at your 24-hour period low point, because this now is your support and resistance on your higher time frame analysis. Okay, after finding your direction, on which we will break down on lesson 1, 2, and which you've already watched. After understanding your downtrend and understanding how we conduct our higher time frame analysis, you will understand that it's crucial to go down to the smaller time frame and see what price action does at each 4-hour candlestick. This 4-hour candlestick is a shooting star, which is indicating huge rejection point. Then we've got another doji from rejection point, and now we're seeing some more rejection from this level, indicating this level is crucial. Okay, crucial level for us. Okay, so with us knowing that, we need to find our support point. Our support low point is here, so we're going to pull out a horizontal ray, and then we're going to place it. Okay, we don't want to place it all the way around, we just want to look at what's happening here. We know what our overall bias is. Our overall bias is downtrend. Okay, overall bias is downtrend. We know our areas of resistance are here. Okay, we know that we can see candlestick rejection. We want to see what is happening here, and what's happening here is that we are getting rejections from this point, and we are expecting short positions, and we're expecting a move to the downside. Okay, with that being said, what you want to do now is you want to go down to the 1 hour, and it's important now to see 1 hour support and 1 hour resistance. Even though we have our higher time frame, we want to see our medium and short term support and resistance, where price action can potentially take a pause, or price action can just reverse to short term before continues momentum to the upside, as we can see here. So what price action would be? So what we want to do is we want to pull out a Fibonacci tool. We want to go to our high point, our highest point, which is here. We want to pull down to our lowest point. Okay, and once we do this, what we want to do is you want to bring that 50%. You want to pull out a Fibonacci tool, and then once you do that 50%, you want to place it. And once you've placed that 50% with the horizontal ray, you want to close this Fibonacci, and this is your middle point. So where you see this areas of rejections here, support, multiple rejections. If price action breaks here, then we are good to go to the downside. So this is what we do. We will go down to the 15-minute now. We found our medium term support. We found our higher time frame where we want to hit targets if we break. Okay, this is our strategy of using our support and resistance. And now we've got a resistance point up here. So if we can break this and retest, then we're good to go short to the position all the way down here, giving us a 44 pip to the downside with potential stop loss off. If you take a trade from somewhere on here, just above these highs here, 31 pips. It's not bad. So yeah, but with momentum being in our favor, multiple rejections, the probability of the trade going our way is extremely high, because what we are doing is we are going with the trend, and we are going with what we see. So that's how we use our support and resistance here at here at Prime FX Trading. I hope you enjoyed that breakdown, and we move on to the next lesson.